and welcome. This is Mary Ellen McGonagle here with Erin Swenlin with Chartwise Women. And this is the show where Erin and I share our many years of expertise, all with an eye toward helping you outperform and also, of course, as always, educate you. And Erin, I know we're heading into a nice long weekend. Any big plans?
Yes, I'm very excited about having a long weekend. My brother and his family are coming down from Utah, so we saw them back in July over the 4th of July, and it'll be exciting to see my nephews again. So looking forward to having some family time.
Sounds like you made it a little too much fun July 4th, so they're coming back.
Exactly.
I'm sure it'll be great.
I spent my last holiday with them, and now I'm going to spend my next day off with them.
Oh my goodness. No, it's always great to have people come in from out of town. My daughter is coming all the way from Ohio. She'll be visiting, and always a delight. We'll, I'm sure, get to the beach at some point, but yeah, hope everyone has a great long weekend. And I know, Erin, you and I were going to just mention that Chartwise Women in its current iteration is going to be twilighted or going off into the sunset. We are revamping the show a bit, so we will not be recording live for the next several weeks, but we will be back better than ever, I guess, right?
No, I'm very excited. It's going to be a lot different in sort of the format and the graphics, but also the big news is, I would say, that you're going to actually see us on camera.
Oh boy. Now that's worth the price of admission, right?
Exactly. Just to see us talking.
Oh my gosh.
Person.
Yeah, that'll be
good. This, you know, the voice out in the
netherworld
there.
Yeah. Well, that'll be fun.
Fun.
Yeah, I think it'll be great, and we look forward to that. But let's go ahead and share what we are going to be talking about today. We, of course, wanted to not end things, but share top ways and our favorite ways to what I'm calling play the market. And as we move on, it will make quite a bit more sense. But basically, Erin and I have similar styles, but we also have setups that we really feel work well, and we'll share those setups with you, particularly in the current market environment. So as we move on, this will make more sense, but we're going to share historical precedent and then current setups that look really quite interesting here.
Yes,
so
excited.
Yeah, it'll be great. So before we get into that, let's go ahead and share our wisdom of the week. And mine's up there at the top, talking about making sure that you are tuned into what I'm calling the market's rhythm. And by that, I mean, are we in a up and away, moving up at all cost uptrend, or are we waffling a bit? Just where is the market? And then from there, you will want to adjust your trading style if you are short-term in nature. Of course, longer-term investors, you are not going to be quite as concerned with the nuances of the markets on a daily or weekly basis. But certainly, if you're more active, you definitely want to be tuned in. So, Erin?
Absolutely. And mine is the second one, and that is not to rush into a trade or an investment. Or stay married to it. We've talked about that in some of our previous shows, because there are always great setups. They're always out there. We just have to tease them out from what's going on. And, you know, some of the stuff you've been talking about the market's rhythm and kind of understanding where the general market is will help you figure out where those great setups might be. And of course, we're going to share what we think are great setups.
Yes, as always, we enjoy sharing our wisdom. So yes, let's go ahead and get started. First up, I will share one of my favorite ways that you can get into stocks. I, of course, do traffic and favor high growth stocks. They have strong earnings. They have strong upside potential. So let's go ahead. What I'm going to do is begin by just giving a very quick view here of the broader markets, just to give a sense. Certainly, you are feeling what I'm going to share with you, what I'm seeing as far as the markets. So first up here is a daily price chart of the S&P 500. And what I'm pointing out here is the market's environment since going back to the beginning of May. So what we're experiencing here is a lot of uncertainty. This period is highly unprecedented. We're coming out of this major pandemic. The growth numbers are parabolic. But where are we? Is inflation high? What are interest rates doing? So with that uncertainty, you will see the markets pull back. So here's the S&P. It pulls back to that 50-day simple moving average at the beginning of May, trends upward, pulls back again in June and again in July. So seemingly we're in good standing. We had a little bit of a dip here in August as well. So a lot of in the way of fits and starts. So later in the show, I will share with you how to play those pullbacks, but really just giving you a sense. And then from here, let me go ahead and share with you another dynamic that is taking place. A lot of this on the heels of strong earnings reports and other really relevant high growth related news. And that is stocks that gap up after earnings. So I'm sharing with you a company called Palo Alto PANW. They came out with their earnings about a week and a half ago, and a couple of dynamics in place here. First off, going into earnings, the stock had pulled back. It was at a relatively low valuation level, so it had an exaggerated gap up, but still definitely worth noting because as you can see, the stock advanced further out of this gap up. So when you are looking at gaps up, a couple of characteristics I'm going to share with you, and then I'll share with you current stocks that are setting up right now that gapped up today and yesterday. So first up, when you have a stock gapping up on very heavy volume and it causes that stock to break out of a base, this is super bullish. A couple of things will occur from here. One is the stock will continue to advance higher, similar to PANW. You're going to want to pay attention to those outside momentum indicators. Very quickly here, I'm going to go ahead and share with you an intra-day chart so you can really make sure that that uptrend is still in place. This is a 60-minute, 1-hour price chart. Here's that gap up on earnings, huge volume. What you want to be on the lookout for as far as further subsequent upside is make sure the stock remains above its moving averages here, the 5 and the 13, and then your outside momentum indicators are positive. Above, this is your RSI, still above that net neutral. Your MACD has trended downward. It's simply telling you that this huge upward momentum has just kind of shifted, but we're still above that net neutral zero. We are still in positive territory. So from here, I will share with you another stock that had historically had a very big gap up on earnings. And this is a stock from my MEM Edge report. It's a bi-weekly newsletter. We picked Dick's Sporting Goods, DKS. We picked it up back here prior to its Q1 gap up on earnings. So the stock is up about 60% from when we put it on. But what I wanted to point out here, as it relates to the topic right now, is that gap up on earnings. Take a look at this huge volume. So what I've been advising subscribers subsequent to that gap up is that there is further upside ahead. And in fact, the stock is up 12% beyond that big gap up. So again, from here, I'm just going to very quickly share with you that intraday 1-hour price chart so that you can know what I'm looking at, how I've been able to advise subscribers to stay with the stock. Here's that big gap up on earnings, huge volume. The stock stays above the simple moving averages for the most part. We can see that that RSI is positive and the MACD. One last name while we are on here. This has been another big gap up winner. This is Chipotle, CMG. And what you'll see occur here over time is you'll have this parabolic big move. And then at some point, it really will, your time will be better served elsewhere. That MACD trends below here. For the most part, it is meandering. That explosive upside is, for the most part, behind us. So let me from here just share with you a current example of a stock that has gapped up on earnings. So let's go ahead. NTNX, this is a software stock, gapped up today. Again, it had pulled back going into earnings. The gap up is causing a base breakout, and you're having big volume. Momentum indicators are positive. And from here, just one last name that you can put on your radar, use those characteristics I mentioned. This is PVH on the daily, gap up, huge volume, causing a base breakout. So from here, you can go to that intraday chart and take it a step further. Erin, pass the baton and you can share one of your favorite setups here.
Oh, yes. Okay. Well, I have a ton of them, but I'll try to make it brief. But right now, you happen to mention Palo Alto, Pan W networks, and it's really in that cybersecurity area. And that area has really taken off. And a lot of it is due to, of course, all of those cybersecurity hacking events that we've experienced. And more than likely, we're going to continue to see a lot of emphasis in this area. So this was one of the stocks that I really liked last week. I did pick it up on the breakout here because I love to see these trading ranges and then the breakout. I think that's great. And of course, as you were talking about, having it come on strong volume. So that's one of the things I want to see. And also, you mentioned with that pullback, I mean, it's a very similar situation here with hack. And this is the cybersecurity ETF. So if you don't really want to be maybe exposed to just one stock, this is certainly one way you could get involved in it. But some of my favorite setups, and I'm just going to go a little bit back in time here, I'm a chart pattern fanatic. I think most people know that who know me. I always have an eye toward chart patterns. My eyes are always drawn to them. And one of my favorites is those bull flags. You get those big moves up like you were looking at with gap ups. And then you see that consolidation back and forth, basically digesting that giant move. And so then what you're going to look for is a nice breakout. In this case, we did see a pullback, but it pulled back right to that 50-day, just below that. And then we saw it moving right to the upside there. So I think that that's a really great pattern to keep an eye on. And then the other pattern that I like to look for are the descending wedges. And these are a bunch of people ask me in the trading room that I do on Mondays. It is free. Just go to decisionpoint.com. You can sign up. But they were asking, with lower highs and lower lows, how is this possibly a bullish pattern? Well, what it is that you can see, obviously, you have the declining trend. But when the lows start to be a little less low and you start to see that kind of curvature a little bit, if you will, that is going to tell you that the next time out, you're going to look for that breakout. And in this case, that was a really great breakout for Honeywell back, gosh, this is probably a very old chart, 2017, but it's really more for giving you an example. So what do I like today? Well, right now I'm very excited about those rare earth materials, and I'm going to talk about this a little bit more when we get to later in the show. But lithium right now is a huge one. This one I put on my list Tuesday. We're getting a brilliant breakout. But where is my play here? Why did I pick this out? Well, you have, again, this trading range, and you get the breakout, a little bit of a pullback to kind of digest that move that we had, and then a bounce right off of that 50-day EMA. And you can see the breakout here, back out of this trading pattern, this trading range, and now it's popped back up. This one, I think, still has a lot of upside. Lithium is used in batteries, electric vehicles, a lot of those kinds of things. So these rare earth materials are becoming a lot more interesting, if you will. Uranium being another one that I'm liking right now. And again, this one I did put to my subscribers of the Decision Point Diamonds. I put this one out Tuesday, and I picked it because it had just gotten this lovely little breakout from this very strong area of overhead resistance. You can see that 20 and 50 are also trying to give us a silver cross, if you will. And then there's your momentum. It's now above the 0 line. And of course, you can see the OBV is certainly confirming this giant rally with lots of volume coming in. I think that uranium looks really good. So
I
that's
agree.
my
Yeah.
current faves.
Poised to break out of a longer term base too as it continues higher at about that 23.5. So very, very
Absolutely. I
interesting.
mean, look at that giant move this week, but I
Woo.
still think you've got a lot more as an intermediate term investor. Here's that flag, right? We've got the big flagpole, and we got a little bit of a pullback here to that moving average here. I use a 43-week one on my weekly chart, and now we're getting the upside breakout. With bull flags, the expectation is you're going to get a breakout that is the length of the flagpole. So we're getting the breakout. And so now we can expect a pretty nice rally to the upside.
Very good. And that intraday is also interesting as well on URA. So good stuff. Yeah. So we are going to take a brief break, and we have other areas, other plays setups that we like. So we'll be sharing that with you when we get back.
I think the thing I like best about hosting Decision Point is getting my dad's point of view on the subjects right then and there, rather than waiting until we can get together another time. I like the fact that I get to see him and we talk before the show. I get his input, and even during the show, he'll add in little pieces and bits of information about a chart that maybe I didn't see. And so just being exposed to that experience, and of course he is my father and I adore him for that anyway. But it's just great to be able to introduce him more to everybody else, since he usually has been more in the background of our industry.
All right, we are back from break, and we're now going to be talking about how to buy the pullback. And Mary Ellen, you have some excellent examples, so I'm only going to take a few charts, but I know this is kind of one of your specialties, is it not?
It is. It is definitely, rather than chase the stock, I learned this the hard way, that you are much better served to let that stock come to you. So, yeah.
Absolutely. So I was talking about the rare earth metals, and China does have a kind of a corner in the market on that. And now that with what's going on in Afghanistan, they also have quite a bit of rare earth materials available to them. And the understanding is that right now China is poised to help, if you will, Afghanistan with their mining of these rare earth materials. And so when you have a scarcity or you have a corner on the market by somebody, more than likely you're going to see those prices rise. This one was an excellent pullback. I am kicking myself, honestly, that I didn't catch this pullback sooner, but you can see that it had really run very, very high, and it pulled all the way back perfectly right to that 50-day EMA, and then started to make its way out of that. I picked it a little bit early here on this breakout, but we got the pullback here, and we didn't even have to go down to the 20-day EMA, and now we're starting to see it move up and breaking out again. So with my subscribers, when I put this in, I always put a stop in. I put a 9% stop in. It's sort of an intermediate term stop, but certainly could use that as a short-term one. But you can see on this pullback back here, it took momentum out of this sort of overbought situation, took the RSI out of overbought and got it back into positive territory, but no longer overbought. And now we have a possible PMO crossover, which is my momentum indicator. So I'm liking the look of this pullback. I also have Train Technologies. I think this one has a really interesting chart pattern as well. So you got the pullback already. We're starting to see it move back out. This is building materials, and this area could see a pretty good move to the upside just based on infrastructure package that came out. And look at this beautiful little cup with a handle. That is also a bullish pattern. And the expectation, of course, is that breakout above that part of the left, where the left high here, where the cup started to form. So I like Train Technologies. I think that looks good on the pullback. And then finally, I have a real estate stock that they've really started to pump to the upside. And you can see that we had this one picked quite a while ago with a nice 7% stop. It hasn't even come close to hitting it. Nice pullback to that 50-day EMA, moving out of that on nice volume. And we have that PMO crossover buy signal. RSI on today's pullback is now getting out of overbought territory. This is the kind of setup I really like.
Very good. Yeah, I like them all as well.
Writing them down, right?
I promise you I have been, yes, and following along with the charts. So here's what I was going to do as it relates to those pullbacks, just share with you historical precedent. We're looking at a daily price chart of Facebook. And a lot of times you'll see this. Stocks will have what I call personalities, where they pull back to a certain, either the 21 or the 50-day. But here with Facebook, I'm taking us back to the beginning of May, gap up on earnings. The stock has a historical precedent of hitting a new high, pulling back to that 50-day. In order to play the pullback, you're going to want to wait for the stock to break back above these shorter term simple moving averages. It ascends into a nice uptrend, hits a near term high, pulls back to that 50-day. Here's your buy point, right as it breaks above the shorter term MAVs, hits a new high. Now this could get a little, you could get a little whiplash doing this, but just really exemplifies that concept of the pullback and how you can play that. So from here, I am sharing with you a daily price chart of the ETF for software stocks. IGV is the one that I use. It's a bellwether, has a lot of very heavy hitters in there. And software stocks really ran into trouble. This is going into March. Interest rates were rising dramatically. Into May, inflation fears. So a lot of pullbacks, but I, with my MEM Edge report, was able to get into this particular May into June pullback. I'll share with you from here one of the names that, again, we were able to take advantage of here. So this is Adobe, a bellwether, really one of the most winningest, if you will, of the software stocks out of this pullback. So the stock was added to my MEM Edge report here. As mentioned, this pullback was in line with all software stocks, but I want to wait for the name to break back above these shorter term simple moving averages. And then the stock, since then, it is still on our list, using a pullback to the 10-day as your buy point. Once the stock enters an uptrend, it will have a shorter term MAV that will be acting as support. Pullbacks to those levels are your buy points. And then one name here that the pullback did not work, and this is going to be equally helpful because they're not all going to take shape. This is General Motors. At this point in time, I had done a webinar back here and I was looking for GM to find support at this 200-day. It did not. And this is why when you're looking to play the pullback, you need to make sure that the stock has broken back above these shorter term MAVs. This is resistance. And in this case, it did not. So it would have kept you out of the stock. So I've had time to share certainly at least one name that is setting up. It has come out with good numbers. It has exhibited a pullback. So here's Cisco. CSCO is the ticker symbol. This bar here, back here in late August, was the release of their earnings. Take a look. This is that strong volume that I talked about. So the stock hits a peak in price. It gets oversold, that RSI over 70, but it does pull back very nicely to this 10-day simple moving average, setting up as a nice buy point. So yeah, I think we've made our points here. We can now move on to our last time doing our last segment, and it
Yes.
is where we go about, and actually our producer Eric came through again and found this lovely headline. It's called "Yeah, That Happened," and this week it's all about a cow that was spotted in a McDonald's drive-through. And I'll tell you, it took place in Wisconsin. The driver had just come back from an auction and had actually several cows in his cab, the back of his vehicle. And the individual driving in front of them just could not believe that they were looking at cows while on their way through the McDonald's drive-through. Oh my goodness, the things that are going on out there. So from here, we can go ahead and take a look at some other stocks. I'll go ahead and share my screen. And Erin, if you have a name, of course, we can look at that.
Oh, I'll talk about what you have brought to the table. We can
Oh,
both.
you bet. You bet. Yeah. So this is McDonald's. Of course, we would be remiss to not take a look. And the company came out with really good numbers in here. And this is all about that pullback, right? So it pulled back to this 50-day. I'm not overly excited. The dynamics are sort of there, but not a lot in the way of volume as far as potential, playing this pullback. And also historical precedent tells me that McDonald's can just kind of languish here. We're going to look at another name that is much more dynamic looking. I don't know, Erin, if
Yeah, I have to say that's what I know you will often call a go nowhere pattern. It's just not doing much. And honestly, a lot of this is restaurants and bars, but this is something you'll also see on those staples stocks.
Yeah, so here, let's take a look at a different name. This has more to do with the chicken that crossed the road as opposed to the cow. This is Wingstop, W-I-N-G, and we can see this pullback close to that 50-day, but take a look. This is a much more interesting chart to me as far as the dynamics.
Absolutely.
As it broke
Totally
back
agree.
above the shorter term moving averages, we can see the 10-day poised to cross up above the 21. That's a golden cross. Your MACD black line up through the red. So you're getting that nice downtrend reversal on the momentum dynamics. And the stock is poised at about 178 to break out of a nice 1 month base. So that one is certainly, compared to McDonald's.
Oh, definitely different. Isn't it just, you talk about personalities, it's certainly a different personality. You can actually see it has these really strong uptrends. It doesn't stay in that go nowhere.
Exactly. Once it gets
passage.
going, and I can tell you historically, I've had this on my list back here. It's been a big winner for us, certainly in the past. So, it does have that propensity and the ability, once it gets going, to really take off. So one last name that we can look at here is I thought of Wisconsin and the cheeseheads.
Yes, I was just going to say Green Bay, right?
Yeah, I went right to the pizza, the cheese, PZZA. And Papa John's is really defying what you're seeing elsewhere in this restaurant space. Take a look here. It did have that base breakout this week, all about the pullback, pulling back to this upward trending 21-day. We can see that historically the stock does have that tendency pulling back to that 21 and then resuming its uptrend. So a nice base breakout, nice volume here as well.
Yeah, absolutely.
So Erin,
I definitely like that.
The sign off for
we'll sign off on our hiatus coming up for
the
few weeks. Yes.
But
really looking forward to the new update, if you will, the reboot of Chartwise Women. We have a lot on tap for you. I think you're going to really enjoy the new format.
You bet. So be on the lookout for that. Have a great long weekend, everyone. And until we see you again, happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.